Hello and welcome to a brand new video about automated trading strategies. Today I'm excited to share two systems from our portfolio that are working very well. Both trade the same asset, the Nasdaq futures, and have been running out of sample since 2023. As always, we'll walk you through their performance and explain some key principles behind each system, so you can try your hand at developing trading systems for this asset yourself. With that, I'm one of the coaches at the Younger Academy, and let's jump right in by analysing the first strategy. The first system is a classic intraday trend following strategy that only works on the long side. Positions are triggered by something simple and widely known, the break of the previous day's high, and we're using a 5-minute time frame as data 1. As you might expect, we'll open a long position once the price breaks above the previous day's high. You can see this clearly with the indicator plotted on the chart, showing the highs and lows from the previous day. We'll hold the position unless the stop loss or profit target is hit, or until the session closes at 4 p.m. in exchange time. We all know the Nasdaq's strong bullish bias over the last 10 to 12 years. With this system, we're simply capitalizing on the natural tendencies of this asset in the easiest way possible, buying at new highs and keeping drawdowns and risk within acceptable limits. Because, as you know, this is what separates a solid trading system with clear rules and limited market exposure from the standard buy and hold approach. Of course, the strategy also includes a time window to target the most profitable times for opening trades, as well as specific patterns from our proprietary library. Now let's check the system's metrics. As you can see, this strategy has generated about $250,000 in net profit from 2010 to the present, with a maximum drawdown of just over $10,000. The average trade is around $200, which is quite strong for an intraday strategy that only stays in the market for a few hours. Looking at the equity curve, you'll notice it's very steady, which is typical of many Nasdaq systems. Now let's move on to the second strategy, which is a bias system. Like any bias system, it aims to take advantage of recurring market behaviors. In this case, just like the first strategy, we're dealing with a very bullish asset, the Nasdaq futures, and that bias still holds true. However, there are certain times of the day when it's more advantageous to open long positions, like around the middle of the cash session, when prices might dip or go sideways before gaining strength again, which statistically happens often with this future. During these hours, the system will enter a long position and hold it until the early hours of the next morning. Of course, we don't enter trades every day, but only when prices during this time frame break above a volatility channel, signaling enough momentum for the price to likely keep moving. Let's take a look at the equity and the system's metrics. This system has generated around $145,000 in profits since 2010, with a remarkably low maximum drawdown of just $8,000. The average trade value is over $230, which is excellent, just like the first system. Looking at the equity curve, you can see that performance over the last year has been truly impressive. And overall, the strategy maintains a very steady equity line. As mentioned earlier, both systems have been out of sample since 2023. We'll see in the coming months if these strong results continue through this second year out of sample. In conclusion, today we have explored how you can profit from the Nasdaq market with controlled risk using two simple but robust strategies. If you're interested in learning how to build your own trading strategies, I encourage you to click on the link in the description. There you can watch a free presentation from Andrea Unger, get a copy of our best-selling book, The Unger Method, by just covering the shipping costs, or even schedule a free strategic consultation with a member of our team. That's it for today. I look forward to seeing you in the next video.